Hey there, welcome to another video of Portfoliometrics. Today I want to show you our new portfolio optimization tool. What can you use this tool for? Well, let's assume you've chosen your portfolio, you've invested some money, and after half a year you're checking your portfolio and you realize that the market has evolved and that maybe you have an asset allocation in your portfolio that doesn't really align with your investment goal anymore. It doesn't really align with the assumptions that you've taken initially or with your risk-return profile that you want to achieve. So for this use case, you can use the portfolio optimization tool to find an optimal portfolio allocation that aligns with your investment goal again. And to demonstrate this, I want to today walk through two practical use cases of how you can work with this tool. Let's get right into it. In the first use case, let's say you want to rebalance your portfolio using a few constraints that you have based on your own personal preferences. For this use case here, we work with the following portfolio. We have, first of all, 3 individual stocks, Apple, Microsoft, Nvidia. Then we have a bond ETF to also manage some risk. We also invest in some bonds. And then we have 2 ETFs, the general S&P 500 ETF and also an emerging market ETF. So we have a few constraints here. First of all, we are saying on the asset level that we don't want any individual asset to take more than 15% of the allocation. So we first of all apply this maximum restraint of 15% on the asset level here. Then we're also saying that we want to have a minimum always of 5% into bonds just to manage the risk a little bit. And then also we're saying that for the emerging market ETF, we always want to stay between 10% allocation and 25%, as well as for the S&P 500 between 20% and 40%. The last restraint is that we basically want to not get overexposed to the technology sector. So we're saying that we don't want to have more than 40% of our assets in the technology sector. In order to build in this constraint, we can work with the grouping functionality by basically tagging each of the stocks that are in the technology sector and then giving this tag down here maximum allocation. In this case, we can apply 40% to not get overexposed to the technology sector. Right, so let's submit this and let's see how we can optimize our portfolio based on those constraints. So we see the tool already gives us several options here based on, of course, the optimization strategy that we want to use. First of all, we see down here in the table our provided allocation, which currently sits at 21% expected return with 22% volatility. Right? So now we have different strategies. Of course, we can, for example, optimize for the Sharpe ratio. This would mean we can actually increase our expected return while pretty much staying the same on the volatility. So we see that already a small change can actually bring us up 2 percentage points in expected return without even accepting any more risk. Right? You then also can, of course, if you want to, for example, manage better your downside risk, go for the max Coutinho ratio, or whatever your optimization goal would be. We also dive a bit deeper there in the blog article, so feel free to read that. Right, so let's move on to the second use case. Let's say in this case, we actually want to define our own values for the expected return and for the volatility, right? In the standard case, we would always use some historical data to come up with the expected return on the volatility that we use for the optimization calculations. But let's say you've maybe made your own fundamental research. You have your own assumptions about the market. Maybe you have some specific insights that you want to build into this optimization. For this, we can, let's first of all get rid of the assets and group constraints. We can define our own custom expected returns and our own custom volatility. I could fill them in here, or I could actually prepare this as an Excel and import this, which is very useful if I'm working with a big portfolio, which is what I'm going to do in this case. I've already prepared a CSV for this. We can choose the correct CSV file and upload this. So now you see that the composition or the assets have stayed the same, but we have now included some values for the expected return and for the volatility. In this case, we will not work with asset constraints and group constraint, just to keep it a bit simpler. And again, we can submit this and look at the report, look at the different optimal allocations based on the different strategies that the portfolio is giving us. As we go down, we can of course also look, for example, at the asset correlations between the assets in our portfolio, and we can work with the efficient frontier. So as it stands right now, this is the green dot is our current strategy with the current allocation. We are close to the efficient frontier, however, we're not on it. That means, as we've also seen before, there is an allocation that would be more efficient, so give us a higher return while keeping the risk the same. As you go down here, you also see that we give you a list of 100 different portfolio options, which each give you a different risk-return profile. So let's say in this use case, you are actually looking to achieve a very specific risk-return profile, and you want to know what is the corresponding asset allocation that I need to achieve. Let's say in this example, I want to achieve an expected return of exactly 15%. So I go down this list here, I look for the 15% expected return. I can immediately see which risk I have to accept to achieve this expected return, and I can then also see what this would mean for my portfolio allocation, so how I have to rebalance my portfolio to achieve exactly this expected return. Alright, this was it for this video. I hope you find the new portfolio optimization tool helpful. We've just recently launched it about 2 weeks ago, so please feel free to give us your feedback, to let us know what you think, and to also let us know what additional features you would like to see implemented. Thank you so much, and see you the next time. Ciao.